Hello and welcome to another edition of 9 to 5 Live. Japanese investors are the largest foreign holders of US debt, and one of their biggest investors is Norinchukin Bank, which has large unrealized losses. They are selling half of their portfolio, they announced it this week, over the next 12 months, which amounts to about $63 billion. They are citing the end of the yen carry trade, but also the fact that they think interest rate cuts will be slower than expected in Europe and America. Francois, hello.
Hello.
Nice to see you. Thank you for joining us again. There's an auction, there's several auctions coming up this week of 2-year, 5-year, and 7-year US Treasuries. Against a backdrop of sales, potential sales by Japanese investors because of the end of the carry trade, but bond prices are holding up very well, don't you think?
I agree with you. They tend to. First of all, we need to put that into context. The first thing, we all know that budget deficit in the US is excessive and it's not going to improve. CBO came out last week with new numbers. Budget deficit is going to increase and it's going to be stronger than expected before for 24 and even for 25. We all know that this issue of debt in the US is a major medium-term event that the US is not dealing with a key issue. IMF came out with warning. They came out over the last 12 months saying we need to have an action, not only by the US, but most developed countries to deal with the issue of debt. There is too much debt, sovereign debt. So that's the context. The second element in the context, and this may explain why you had such a good behavior by bond markets lately, it's connected to the fact that you have some sign that the economic activity in the US is slowing down. You had sign that you have inflation that has improved after a very poor first quarter, late numbers, and it should be confirmed on Friday with the PCE that will be published. Inflation is moving the right way. So at the end of the day, I would say the outlook in the short term has improved because of economic condition in the US. These support the case for 2 rate cuts in the US by the end of the year, 1 or 2 rate cuts. So this is something that is helping. But you are right. At one point, we will face a day of reckoning on the US bond market if on the one side you have less demand from central banks and on the other end, you have less rate cut and less ability for the government to really deal with the budget deficit. So this is a huge problem for the medium term.
Coming to the IMF, you mentioned the IMF and their report. What did the IMF say?
They said that the US need to deal, and not only the US, but the US in particular, but in general G7 countries, they need to deal with this debt. There is, and the deficit, because there is, the macro policy mix in the US is clearly a fiscal expanding policy and a kind of monetary tightening. They need to rebalance this move. They need to get into a macro mix that is more monetary, less fiscal. Because at the end of the day, this fiscal excessive debt, which is close to 6% of GDP, when you are at the top of the cycle, imagine what happens to your deficit when the economic activity is slowing down, because it means that you have pressure on taxes, pressure on receipts. If you do not master your spending, then there is a problem. So clearly the warning is you need to put your fiscal house in order. That's the message of the IMF.
Coming to the week ahead, what things are you looking forward to this week?
I think that there are different elements. I think that people need to take a look. You mentioned the issue of the carry trade of the yen. On the currency front, you have a lot of volatility lately in the sense that the US dollar has appreciated against most currencies. The yen is very weak. Emerging currencies are very weak, and etc. I will keep watching what is happening on the Forex market because I think it's quite interesting. Also to be noticed is the fact that last week the Swiss National Bank lowered interest rate. It was a kind of surprise for the market. The Swiss franc has been a little bit weaker. It will be interesting if it is sustainable or if it's just a blip and that people will pile again into the Swiss franc in the coming weeks and coming months. I think, to my point of view, that the Swiss franc has room to appreciate further in the medium term in the environment we are living. Then more punctually, I would say that there are numbers that are coming in the US, which will be interesting. The consumer confidence will come out tomorrow. We will have also, as I mentioned, the PCE will be published on Friday. People expect that it's going to move down. I think that you have durable good orders that are coming in the US, also very good indicators about the US economy on Thursday. And in Europe, mainly I will look at the business and consumer survey on Thursday, and Friday there will be CPI numbers coming out. So the main suspects are the ones that I mentioned for this week.
Fedex are announcing their results this week. That could be quite interesting. Can you explain Fedex results to us, please, and why it's so important?
It is a forward indicator in the sense that usually FedEx is a good approximation of economic activity. FedEx is going well. It means there is a lot of activity associated with a lot of activity. It could give you a signal that the economics and the earnings, how they have behaved lately, and what it means in terms of the cyclical stocks in the US in the earnings season that is going to come for the second quarter. So usually it's interesting to take a look at what they are saying in terms, mainly in terms of sales, in terms of their revenue. And I think that is a good indicator to watch. You are right this week.
Okay, Francois, I think that's all we've got time for this week. Thank you very much indeed. I look forward to seeing you next week.
Bye bye.
Bye bye.